Are you tired of struggling with buy and sell signals in trading? Well, I've got a game-changing indicator that can make all the difference. It's called the Cosine Kernel Regression, and it's the most accurate indicator in TradingView. Developed by Quantra System, this indicator uses a unique kernel regression technique to predict future prices based on past data. Unlike linear regression, which assumes a straight-line relationship, the Cosine Kernel Regression can handle non-linear relationships, making it perfect for the complex price movements in the market. But that's not all. In this video, I'll show you exactly how to add this powerful tool to your chart, explain how it works, and teach you a simple but effective trading strategy using it. So if you're ready to boost your trading game, stick around and let's dive in. First, let's add the Cosine Kernel Regression indicator to TradingView. It's really simple. Open TradingView and click on the Indicators button at the top of the screen. In the search bar, type Cosine Kernel Regression and look for the one created by Quantra System. Click on it, and it will be added to your chart. You'll see it appear below the price chart, ready to use. This indicator is powerful, yet easy to add and use, making it perfect for traders of all levels. Now, let's talk about what makes this indicator so special. Kernel regression. Don't worry, it's not as complicated as it sounds. Kernel regression is a way to estimate the expected value of a random variable. In simpler terms, it helps us predict future prices based on past data. Unlike linear regression, which assumes a straight-line relationship, kernel regression can handle non-linear relationships. This is important because price movements in the market are rarely linear. Instead, they tend to be more complex. This indicator uses a multi-layered approach and includes many indicators, including RSI, Relative Strength Index, Stochastic Oscillator, Bollinger Bands, Chand Momentum Oscillator, CCI, Commodity Channel Index, Fourier Transform, and Volume Zone Oscillator. This makes it an excellent tool for traders looking for more reliable buy and sell signals. The Cosine Kernel Regression indicator has two main components: the fast trend line and the slow trend line. Fast trend line. This line changes color between pink and green. When the line turns pink, it indicates a decline in price. And when the line turns green, it shows an advance in price. It's also very responsive to price changes, so it shows short-term movements. And because it's so sensitive, it can sometimes give false signals or noise. Slow trend line. Now, this line represents longer-term price movements. When the line is above the center line, the area turns green, signaling an uptrend. And when the line is below the center line, the area turns purple, indicating a downtrend. It's also less responsive to price changes, focusing more on long-term trends. These two components work together to give you a clear picture of both short-term and long-term price movements. Now let's set up the trading strategy using the Cosine Kernel Regression indicator. First, we need to tweak some settings. Click on the indicator to open its settings. In the Input tab, set the regression look back to 200. Next, go to the Style tab and uncheck the slow line since we only need the fast line and its buy-sell signals. After that, add two horizontal lines on the chart, one at the 30 level and another at the -30 level. Next, we need to add the MACD indicator. Search for MACD in the Indicators menu and add it to your chart. Open its settings and adjust the fast length to 100, the slow length to 200, and the signal smoothing to 50. In the Style tab, remove the MACD line and signal line. We only need the MACD histogram for this strategy. Now, our chart is set up and ready for trading. This trading strategy is best suited for short time frames like 1 minute, 5 minutes, and 15 minutes. It can be used in any market, including Forex, crypto, and stock markets, as long as there's high trading volume and liquidity. Conditions for short positions. The MACD histogram must be red. You must wait for the Cosine Kernel Regression line to go above the 30 level. When the line goes below 30 and the MACD histogram is dark red, it's time to enter a short position. Make sure to set the stop loss above the previous swing high. Aim for a profit target at a 1.5 risk-to-reward ratio. Conditions for long positions. The MACD histogram must be green. Wait for the Cosine Kernel Regression line to drop below the -30 level. When the line goes above -30 and the MACD histogram is dark green, it's time to enter a long position. Set the stop loss below the previous swing low. Aim for a profit target at a 1.5 risk-to-reward ratio. This strategy helps you catch short-term price movements effectively. Remember, flexibility is key. If the line is very close to the 30 or -30 levels, assess the market conditions before making a decision. Always use proper risk management to protect your capital. Let's walk through some practical examples to see how this strategy works in real time. Short position. When the market is trending downward, it's essential to identify the optimal entry points for a short position. We want the MACD to be red, indicating a strong downtrend is in place. Next, wait for kernel regression to rise above the 30 level and then fall below the 30 level. Once it does, check the MACD to ensure its color is dark red. To capitalize on this opportunity, consider opening a short position. You can place your stop loss above the recent high. To maximize your gains, optimize your take profit with a risk-to-reward ratio of 1 to 1.5. Now let's wait and watch what happens with our short trade. As you can see, our trade has reached the take profit. Long position. But what if the market is trending upward? Then it's crucial to identify the perfect entry point for a long position. In this scenario, we want the MACD to be green, indicating a strong uptrend is in place. Next, wait for kernel regression to fall below the -30 level and then rise above the -30 level. Once it does, check the MACD to ensure its color is dark green. To capitalize on this opportunity, consider opening a long position. You can place your stop loss below the recent low. To maximize your gains, optimize your take profit with a risk-to-reward ratio of 1 to 1.5. Now let's wait and watch what happens with our long trade. As you can see, our trade has reached the take profit. Risk management is a must for successful trading. Even the best strategies can fail without proper risk management. The 1% rule states that only risk 1% of your trading capital on a single trade. For example, if you have $10,000, don't risk more than $100 on one trade. This helps protect your capital from significant losses. Remember, no trading strategy is foolproof. You are responsible for managing your trades yourself. Hey, before you go, check this out. I've got another video on your screen right now that's just perfect for you. It's all about multiplying your income in ways you might not have thought of. If you found today's tips helpful, I'm sure you'll find the next one even more exciting. Give it a click. I promise it's worth your time.